Some of the largest banks in the world came together this weekend to stop a potential banking crisis with the merger of UBS and Credit Suisse. Swiss authorities have persuaded the UBS group to pay 3 billion francs, or about 3.23 billion US dollars, to acquire the troubled bank at a marked down price. The historic deal follows the failure of three US banks in the span of less than a week earlier this month. Credit Suisse shares have plunged following the deal, falling 60%. Swiss President Alain Berset says banking giant UBS is acquiring its smaller rival Credit Suisse in an effort to avoid further market-shaking turmoil in global banking. While UBS is buying Credit Suisse, UBS officials said that they plan to sell off parts of Credit Suisse or reduce the size of the bank over the coming months and years. Well, joining us now to give us more insight into this merger and the greater impact on global banking is Mr. Justin Baer, senior special writer at the Wall Street Journal. Sir, welcome to Forum Daily.
Thank you. Great to be here.
So, can you walk us through this merger and what led to Credit Suisse being absorbed by its rival?
Sure. As is often the case with institutions, financial institutions, and banks that run into trouble, it's often the loss of confidence that does them in. And so, what we saw over the past week was confidence completely disappearing from Suisse in particular. We saw, and this was something that was echoed over the weekend as executives were explaining the deal that in their case, deposits were flowing out of the bank at an unsustainable rate, and in particularly the Swiss government had to do something over the weekend to avoid that from continuing.
And it was really this pressure from major central banks around the world, including the US Federal Reserve, that really seemed to seal this deal, all to prevent a global banking crisis. So, what could have that looked like, this global banking crisis, if these moves weren't made?
Sure. I mean, we know from past experiences, past financial crises, the cost sometimes of governments not stepping in. We know the cost, of course, when they do step in, and so this effort was very much led by the Swiss government in this case. Although I think they were in consultation with other central banks around the world. Credit Suisse is a very large financial institution. They do business around the globe, not just in their sort of core banking and wealth management business, but they have a big trading operation, investment bank, asset manager, you name it. And so the consequences to customers, to counterparties, was viewed as grave enough for the government to step in and engineer this deal.
Now, we seem to be seeing a sort of domino effect with the failure of Silvergate, Silicon Valley, and Signature Bank in the US, and now the Credit Suisse merger. So, do you see these moves by UBS being enough to prevent any more aftershocks in global banking?
I mean, we'll have to see, right? I think each of those banks that you name very different sets of customers, sizes, the scope of their operations, and yet they all, as I mentioned earlier, suffered from the same issues over confidence, and it can be very difficult to predict sometimes when that confidence erodes, and so I think regulators, banks, consumers, all sorts of customers are really right now zeroed in on the health of their own financial institutions and looking for signs of trouble. So I think confidence across the system right now is very fragile.
Right, and just about a minute left here, but how do you see things evolving in the global banking sector following this historic deal?
Sure. Well, in the immediate aftermath, we'll have to see what the combination with UBS and Credit Suisse looks like. Credit Suisse had announced a fairly substantial restructuring plan late last year that included the spinoff of their investment bank, largely based in the U.S. So it'll be interesting to follow what that looks like going forward, what UBS wants to keep, and what assets they want to get rid of, and also at this point, what other companies step in and express interest in buying those. I think for the broader banking system, all eyes are on how depositors, the decisions they make, whether they get nervous in their terms of keeping their money in certain institutions and continue to move them in other direction. That's something that is happening at acute level at banks like First Republic here in the States. We also will have to see what happens with the direction of interest rates. Surely this will be top of mind as the Fed and other central banks weigh what to do going forward. Lots of different considerations that go into those decisions. Um, I would guess a month ago they didn't foresee this being one of them. So we'll have to see what this will do for rates going forward.
Lots to keep our eyes on, Mr. Baer. Thank you again for your time today.
Sure, anytime.